Hi everyone, my name is Dinesh Goel and I'm here from Property for Financial Freedom. Here we provide one-on-one mentorship to buy properties in the growth area with high cash flow. Today I'm going to discuss why house and land packages are not really good option for investment purposes. Before I start this video, I want to say this disclaimer that none of this is a financial advice. Please seek advice from experts before making any financial decision. Information provided is general in nature. Let's jump into the video. Let's discuss why not home and land packages for investment purposes. Very first point I want to raise here is basically when you buy house and land package, they are in outer suburb of the cities like a fringe suburbs. Yeah. In general, you'll find a lot of land around those areas which can be developed in the future. Yeah. So if there is a lot of land around there, that means there's a lot of supply coming in the future which can harm your capital growth. Like more supply, less demand means less growth. Yeah. So I'll give you one example here. If you are living in Melbourne, you might aware of that area, Craigieburn. On top of the area, Craigieburn, you have Kilcalo, Mickleham, Donnybrook, and down there you have Wallen, right? They are very very big players building a lot of houses like 5 to 10,000 lots every state. Yeah? That means there's a lot of supply coming in that area in coming future which can harm capital growth. In the time like last 2 3 years when it was super hot, everything was uh, selling like a hot cake. This area performed really well as well, right? But when there's issues like cash rate is increasing every month, and the market is not performing the way it was performing in last 2 3 years, it is very important to buy something in very very tight pocket, right? In these areas it's very very high supply which will harm capital growth for sure. Next point I want to talk about is when you buy house and land package. Generally, you pay more for the house and less for the land. In this particular example, you're paying 390K for the house and just 260K in the land. But the general funda is land appreciates and house depreciates, right? We want to buy established house where the land value is generally like a 70, 80, 60, 70%, and the house value is like uh, 30, 40%. But in these areas, if you buy house and land, you'll end up paying more for the house. Next I want to speak about is the cash flow, right? When you're building house, there's uncertainty in the construction industry. It is taking year, 1.5 year, and up to 2 years sometimes to just build your house. If you buy house and land package, you'll earn $0 during the construction, right? There's no rent coming during that time. Whereas if you buy in a tight pocket where the vacancy rate is sitting around 0%, right, you can get the property rented within a week of the settlement, and your cash flow is started straight away. So again, and because of this uncertainty, if you sign the contract for the house like in 389K, there's a high chances the builder will come back to you saying the prices of the material gone up. Now you have to pay like 10,000, $20,000 more to just complete the house. It has happened to many people in the past. Next is, when you buying house and land package, generally if you buy like 25 square house these days, it will cost you like 350 to 400K. And plus land is around like 250K. You'll end up paying like 650 at least for the house and land package. What I would prefer is buying like 400, 450K assets around the around Australia, different states. For example, now my Melbourne property is not performing, but I have a property, one in Perth, one in Cairns. They are doing really, really good. Diversify your risk. It is always beneficial. Right? Next one is there are a lot of companies who are selling this house and land package. Their first pitch is you'll get a very high depreciation when you every year from this property. For example, you're getting like 15,000, $20,000 every year. If you're like around 40% tax bracket, you'll save like 7 8,000 every year from that property. But they don't really tell you that when you sell this property, you have to pay back in a capital gain tax, right? All this depreciation you have claimed will be added in the capital gain tax, and then you'll pay around like maybe 50% of that back to the government. Next step is like there's a high kickbacks, builder will make money, developer will make money out of this home and land package, and it's like 40 50K sometimes. We really don't want to invest where your 30%, like 10% 20% of the property value is just going in commissions. Yeah, these were my points, which is why you shouldn't go with a house and land package. I hope you found this video informative and it can help you to make more educational move for your next investment property. If you have any sort of question regarding your next investment property, please reach out. I'm happy to help. If you like this video, please hit the like button, subscribe the channel and help me grow this network. Happy investing and see you in the next video.